Nothing breaks my accountant spirit like juggling messy client bank accounts. I'm talking the clunky logins, the missing statements, and random charges labeled miscellaneous, and I'm expected to make sense of it? That's why we recommend and use Relay. It's modern business banking, but built for accountants. Can I get an amen in the back? With Relay, your clients can open up 20 checking and 2 savings accounts, issue virtual cards and physical cards with built-in spend controls, and each of my team members can be provisioned access by me, the firm owner, without begging for login credentials or chasing down 2-factor codes. Relay gives us real-time visibility into cash flow, spending, and transactions. Goodbye spreadsheets, hello cash flow mastery. If you're ready to break up with bad banking and save yourself hours every month, head to relayfi.com/unaccountable. That's relayfi.com/unaccountable. Folks, I can't say it enough. We need sponsors to know that people listen to this podcast. Please help us. Welcome to Unaccountable, the world's okayest accounting game show podcast for product news, education, and updates. I am your four-fingered fanatic of a host, Tyler Otto, and I'm joined by the hook-handed Jeremy Van Grohl. We survived 4th of July with all our digits, man.
Let me see proof.
I mean, they're there.
Oh, yeah.
Should have done it like that. Wow, I'm really bad at a punchline.
Yeah, how was your 4th? It was good?
It was wonderful, except for the client that had a meltdown, and I ended up doing a little work on the 4th itself to save a relationship. So, mostly good.
Mostly good? Tongue-in-cheek? Yeah.
A client who manages a property for one of their clients, and they really effed up. And while it wasn't my fault, I was the one person that could fix it. And it was like, well, I'm pretty sure my client's going to get fired if they don't get this right. So it was like, do I step in and preserve it so I can preserve revenue for me or not? Yeah.
It's the fun times being the boss.
I know, right? Isn't that the joy? How was your 4th?
It was good. I took my crew for a week of camping, and we only glamp. We do not camp. There are water parks and pools and shaded umbrellas and all the fun things. And it was hot, so I loved it. I have the heat rash to prove it, but it was fantastic.
Well, you look great, so must have been good for you.
Yeah, there's an improvement right there. So sorry we can't be together this time, because the last time, remember, we were at scaling. But back to the normal format. But can I, you were in the hospitality industry. I wanted to rant about this last time, but we didn't have time. Just a couple quick hotel rants. Can you just appease me on this one?
I love hearing hotel rants, so hit me.
The short one here is the desks in the hotel rooms that are covered in a glass top, and I have an optical mouse, and I forgot my travel mouse pad, drive me crazy. Why? We know we're in that technology now. Please just have some kind of opaque cover to that desk to make my life easier.
Yeah, so the mouse actually works. I right there with you. That is one of the most frustrating things, because who wants to use a trackpad anymore?
Yeah, first world problems, 100%.
Is that all your hotel rant?
No, the other one is the actual check-in and registration process. So I'm a Hilton Honors member. I love that because I can go in and get my room set and have the electronic key that normally works all pretty well, skip the desk. But most hotels still have this hour-long wait at peak times of people doing things, and the people putting your information in have to do 50 keystrokes of things and new screen and whatever else. What system are they using and what information are they putting in that they don't already have for my registration that takes 10 minutes per person and makes this long line ridiculous?
I feel like, especially check-in of all things, it should be relatively easiest. I know they're going to ask for my driver's license. I know they're going to ask for my card, and I'm going to have to sign a document. That seems like all things I could scan at a kiosk myself.
Yeah, or something. And that's what I get. What is the software? I don't get it. I don't like it. That's all I'm saying.
It was developed in 1992 and hasn't been improved against since. And I'm willing to bet if you're behind that desk, it's DOS-based.
Oh, God. Let's do better.
Jeremy, interesting news, though, and I don't know whether it's a good thing or a bad thing. I mean, borderline, I wanted to save it for winner or loser, but I don't know if this is a win or a loss for us. But did you see that Microsoft is going to get rid of the blue screen of death? The screen that we are all used to seeing when everything crashes will be gone come later this year.
I didn't see this until you saw this, so then I had to like go do a little bit of research on it. But I loved like during that whole airline software issue, like the departure screen had the blue screen of death on it. And then I believe it was the Cubs, who I don't like as a Brewer fan, but the Cubs put that on their like Jumbotron during the game to announce when they had some delay on something, and it was super clever. But like it's gonna get replaced with a black screen or something.
Yeah. But again, like that's the color of my computer when it doesn't work all the time. So you're just telling me I get a new screen of death, but it's no longer blue? Like, at least I got to comment on it before, so maybe I'll miss it.
Talk me through if you were the Microsoft person that suggested this in the playbook. We don't like the blue screen of death anymore. We're going to just change it to a different screen. And I tried to Google to see what the new screen would look like, so I wanted to know what it looked like. I couldn't find it. But like, who decided to prioritize that in their playbook of things to get out to their consumers? Let's change the blue screen of death.
Oh, yeah, no, I mean, companies do this all the time, right? Where it's like something is not broken, or if you see the blue screen of death, something else is broken that needs to be fixed. How about we just make it so we never see the blue screen? But all that being said, softwares will always do this, and they'll fix stuff we never asked for into it, where they make improvements that no one asked for, and then still don't work on the things we need. I'm going to miss it a little bit. Like, not the fact that when I see the black screen of death, but I'm almost going to miss that it's not blue anymore.
Yeah. Did you get any blue or black screen of deaths today with your technical difficulties, Tyler?
Oh my gosh. So people have to know. Okay, so when we have guests, we sometimes record it out of order to work with their schedule. And we're about to just jump right into this interview. And I am a hot mess express. I mean, I was 18 minutes late. My computer said cameras didn't exist. I didn't exist. Audio cutting in and out. Our poor guest is a trooper for surviving. Like, Jeremy, I mean, you had to experience I'm sorry.
No, it's fine. Like, this is where we are with technology, and sometimes it fails. And as professionals, and big air quotes, professionals that we are, we need to work through that. But I didn't have a problem at all. I got to chit-chat with our guest, and he's a lovely individual. So,
well, then let's just jump right into it. Makers Hub, I am so sorry for the compressed interview. That was my fault. If you guys don't feel like you got enough about Makers Hub, listen in at the end, and I'll give a few more thoughts on it. But without further ado, let's just jump to that clip, Ian. All right, Jeremy, back from the conference, and we have a guest again this week. A gentleman that I met several years ago, or a year ago, at the Accounting Day Firm Growth Forum, and their software just blew my mind. And I am excited to get him here because they are pushing the boundaries on what can be done with new tech and tools. I mean, without further ado, Ted McRae from Makers Hub, welcome to the show, sir.
Thanks, Tyler. Thanks for having me on. I appreciate the kind words, and we had a good time at that firm growth forum.
Yeah. Well, Ted, I have so many questions for you today, and because of technical issues on my end, we are crunched for time with you. So thank you for gracing us. Dare I say, we're going to tease your resume and what you guys do as we jump into these questions. So I want to run you through a game I'm calling today Man versus the Machines. You up for the challenge?
Yeah, sure. As long as I can have Perplexity open at the same time.
Yeah. That only seems fair and on brand.
Yeah, all our quizzes are open book.
There you go.
Yeah, I'll be like, hold on a second. I just need to, just a second.
Well, before we jump into AI questions then, real quick, I want to ask, according to your LinkedIn profile, how many accounting software companies have you worked at?
ADP and Paychex, Intuit. I worked for Xero, Accounting Suite, and Makers Hub. But Tyler, I've been doing this for 30 plus years.
So, I'm just saying, that's quite the resume of getting around the accounting block.
When I started at Xero, it's kind of cool. I was employee number 15 at Xero.
Oh, wow.
And so it felt like a $1 million startup, right? A multi-million-dollar startup. But that's where I really kind of got a passion for startups. So then I went over to Accounting Suite and now Makers Hub.
Oh, amazing. I just wanted to tease that question to let both our listeners know, like, you might know what you're talking about here in our space. So first question for you. In the historic 1996 first match between IBM's Deep Blue computer and Grandmaster of Chess Garry Kasparov, who won the first match 4-2, man or machine?
I believe it was man.
Okay, he knows his stuff. Yes, 4-2, man won. In the rematch the next year, man lost. But while computers have come a long way, they are not infallible. Even when the man lost, the machine still lost several games. Computers haven't even solved chess. Self-driving cars still have errors. And AI accounting space, we're making strides, but no software can claim, over 90-something percentile accurate. Your software is taking time and energy away from us to be able to simplify and automate a lot of things. But how do you convert the naysayers who don't trust AI yet because it's not perfect?
I'm going to say something that probably, first of all, should be said in this industry.
Yeah.
And it's kind of like the elephant on the shelf. There's no value in data entry. Yep. I don't mean like there's some value or partial value. There's absolutely zero value in that data entry. And this needs to be said. Now, the data is like really valuable. That's where we tell the stories and stuff like that. But so if you can create a system like we have, because we know that there's errors when we upload invoices or we upload things of that nature, if we can allow the user to tell the system where it errored, so the next time it doesn't, and so we train it as we go, that's how we can reach like that milestone of almost 99% accuracy, because of course we're going to make mistakes, right? Of course, all AI is going to make mistakes. Just like if you're typing into ChatGPT and you say, hey, I want you to do this. And it does like 95% of what you tell it to do. And you're reading through it and you're like, that was weird. I don't know why I put that in there. So you say, hey, don't put the information about like, Michael Scott in The Office in my dissertation. And then you redo it. And so the same thing with ours, you train the system. And that's what specifically on all AI applications you should be able to do, is like just train it so it knows what to do.
And they probably retain that training better than most entry-level employees.
Well, think about this also, like when somebody leaves your company, right? And now you have to, if it's somebody that's disgruntled, there is no knowledge transfer. So just think if you could transfer all your knowledge into like a MakersHub, and when the new person comes on, you're like, hey, just upload invoices and it's going to tell you where to put them. So there's no knowledge transfer.
I love it.
Yeah.
Question 2.
Okay.
In Isaac Asimov's Laws of Robotics, how many rules were there?
4 rules.
I'm sorry, there was 3.
Oh.
Jeremy, can you name them?
No.
I can name them now because I used the robotic to actually to tell me.
All right. Well, I mean, to keep the party rolling, I will paraphrase, but essentially it's, robots can't cause injury to man. They must obey our orders as long as they don't break rule number 1, and they must protect themselves as long as they don't break rules number 1 and 2.
Oh yeah, and that was on iRobot as well with Will Smith, right?
Is there a problem with the 3 laws? The 3 laws are perfect.
Yeah, I mean, this goes back when well before robotics were a thing. As companies like yours are building out these new tools and processes, it's really easy to get excited about how they're going to make our lives easier. But also, how do you put safeguards in place that make us feel protected from not only the data, but just these processes?
Safeguards as far as like AI, honestly, you'd have to ask somebody like Elon Musk, right? Yep. But safeguards as far as, for now, I always say that AI is almost like a 3-year-old now. It knows enough to get in trouble, but you wouldn't ask a 3-year-old or even a 5-year-old to do your taxes for you, right? Or to analyze a balance sheet. You might give it to a 4-year-old and say, hey, here you go. But you're not going to just hand it to your client and go, okay, my 4-year-old looked at it, so you're all good. Yeah. Same with AI. If you wanted to analyze something or create something for you, it needs human intervention, but from the product to the delivery. And that human intervention is, let me just make sure it didn't say Michael Scott from The Office and that's what she said in my dissertation, that it's actually what I wanted it to say. So and I hope that AI never gets this way, But for now until the foreseeable future, it needs human interaction in order to be perfect, or as perfect as needed.
You made that reference twice. Do you have a dissertation that references Michael Scott in the office?
I do. Yeah.
Oh, that's for another episode. We're just going to read it.
All right. Next up, according to a 2023 JP Morgan study, did greater than or less than 75% of businesses with over 100 payment accounts report fraud attempts within the year?
What was it? Greater than or less than what?
75%. So larger companies.
Oh, fraud attempts greater is about 90%.
They reported it was 84%. And yes, I mean, this is becoming a big thing with fraud. You guys at MakersHub obviously are seeing a lot of what's happening in the industry. What sort of things are you guys having to build your systems to fight it against?
So there's a couple of things. So I don't know if you've heard of the fraud pyramid. Opportunity, I forgot what they are now.
Motive, means, and yeah, something else.
But anyway, so there's a bunch of fraud. Internal fraud, which has the fraud triangle or pyramid. There's also vendor fraud, and then there is theft as far as like water washing checks, things of that nature. So internal fraud. The things that, and I do actually a webinar on this every single week for like 350 accountants every week. So I know a lot about fraud, but vendor fraud is actually on the rise. So having checks and balances into actual fraud and creating a culture in your work environment. So that extends beyond MakersHub, but creating a culture of fraud prevention, but then also have internal workflows that cannot be maneuvered around. So X has to approve this bill, and then it goes to Y. And then when Y approves it, then the payment goes to somebody else. They approve the payment, and then it gets paid. Having no other way to get around that without an admin is one of the best things that a company can do. Because if you only have one person, like writing your checks and approving bills, or vice versa, approving bills and then writing your checks, you go right back to that fraud triangle or pyramid of, do they have the opportunity? Do they have all the other stuff? I should pull it up and do it. But I say it every week, but now my old man brain forgets it. Yeah. And then the other one is for check fraud, using something like what we use called Positive Pay. And not a lot of companies that use Positive Pay, only like less than 30%. But that checks, 65% of all fraud incidents include checks. And they're the easiest ones to actually prevent fraud on. So using products like Positive Pay as well.
Awesome. A few more questions for you. I know my technical difficulties have slowed us down, but
no.
Let me see if I can try to keep this going. I have his notes on it, but I did not prepare these. So, all right. So my turn. We're gonna take this over. So when Skynet takes over and sends us Arnold Schwarzenegger, what model of Terminator is he? T1, T800, T1000, or TX?
T1000.
We have T800.
Oh, it's a T800. Okay.
Yeah.
Yes. So he actually fights the T1000 in the second one.
The guy that was all goopy, like the liquid metal.
Yeah. And thank you, Jeremy, for filling in for me. Well, machines aren't here to replace us yet, let's say. What's your opinion on the roles in accounting firms that maybe should be concerned by being replaced by the machines?
So this is something else that is kind of like that hidden elephant in the room, or maybe not hidden, but the elephant in the room is that the non-value work in a firm is going to be gone. The work that doesn't actually provide real true value to a client, that is not just a service, but kind of transforms that client into something they want to be. Because, I do a whole thing on the transformational economy, and that's what people want. They want a product now or a service that's going to make them better. Like an iPhone makes you better at taking pictures or dictation or scheduling your personal life stuff. That's what people want nowadays. And they want a firm that is going to actually build value and not just a transactional. They don't want a historian. They want somebody who can help transform the future.
I know for us, that's definitely a concern is like, how do we make it make sense for a lot of our junior level employees, but also help give them the skills to grow as the tools are going to grow to be more robust.
100%.
One more question, Ted, if you have a
Okay.
moment. If you are standing at sea level, how far away is the horizon line usually? Greater or less than 5 miles?
I'm at sea level right now, and I can see the islands out in front of me. So I would say, I don't know how far they are, actually. That's the only bad part. Less than 5 miles.
Well done. 3 miles on average. And I mean, ultimately, the question I want to ask you is while we look out on the horizon line, I want to know what you see out there for the accounting industry on the horizon in the next, let's say, 3 to 5 miles, years.
I see as technology increases, and it's amazing that the accounting community has more apps and technology available to them than almost any type of, maybe doctors have more, but I mean, like just apps though in general, there's so many. You walk the floors like we were talking about scaling new heights and Intuit Connect and all of these things. And there's just so much that you can do now. It's almost like there's too many apps. But the thing is that as technology grows and more CPAs adopt it, you're going to be able to do more with less. So knowing that you only have 168 hours in the week, the whole hourly billing has got to go away. So in the future, I see hourly billing just almost being laughed at because there's absolutely no way to make more money in the hourly billing except for charging more. So as we become more efficient, it's going to be more and more important for everyone to embrace the subscription-based, value-based, whatever the buzz term is this week. That's going to be more and more important because you cannot run a firm or a bookkeeping firm, accounting firm, and be efficient at the same time. The two don't mix. Actually, inefficiency is better for an hourly firm than efficiency.
Right.
100%.
Yeah, agreed.
Well, Ted, you nailed it. 5 out of 6 with the exception of Terminator. And Jeremy, that is halftime. Let's be honest, most of us didn't become bookkeepers or accountants to spend hours learning marketing systems and chasing leads. Heck, some of us became accountants because we didn't want to talk to people. We did it also to serve clients and build businesses we love. But what if you could get better clients without the marketing overwhelm? Well, that's exactly what Keepable does. It's an all-in-one marketing system built specifically for bookkeepers and accountants. And it works 24/7 behind the scenes to bring in leads, book consultations, and automate follow-ups. You get a professional website, branded consultation page, and follow-up automations all tailored to your business. No more duct taping tools together or hiring expensive marketing teams. If you want to grow your firm with ease and attract better clients without doing more work, go check out Keepable today at keepable.com or follow the link in the show notes to give us a little bit of extra credit with the folks over at Keepable. The part of the show where we go to the sidelines and get a bite out of a nice little app snack. Ted, obviously we're talking Makers Hub. I've kept you longer than I'd like, but I would love for you to give us the highlights of what we need to know about Makers Hub and what both our listeners should know.
So for both the listeners that are out there, Makers Hub was made for businesses, and this is kind of our newer tagline, where every detail matters, because the details are what tell the story, not just like the total dollar amount of a bill. It's what is inside of that bill, every single detail. Oh my goodness, that wasn't me, I promise. I don't know what that but anyway, being able to scan all that detail, get it into your accounting package, match up purchase orders, and so we can upload like a 68-page bill from one file with over 3,000 line items and 63 bills inside of that file in 47 seconds. So just think about what that does to efficiency, and how long would it take a human being to enter in 63 bills with over 3,000 line items? It would take them days.
Yeah.
So that's where I'm talking about efficiencies. Now that's where like the CPAs that come to us just love the product so much, because there's probably, so far we haven't found an invoice we haven't been able to scan.
Yeah. I know for anyone in the restaurant industry and construction in particular, where you need all those line items broken out on massive bills, I mean, Makers Hub's a no-brainer.
Yeah. Yeah, and you know what, Tyler? Remember when we were at the Firm Growth Forum, you talked about this on one of your podcasts, and you said, hey, let's just find an invoice of handwriting off the internet. And I uploaded it and it worked. I did the same at Scaling New Heights for somebody with a Cisco, talking about restaurants with a Cisco invoice. And it was just like a picture, somebody taking a picture of it. Their hand was in there. It was all crumply, and we basically pulled every single bit of information off of that as well. And then I set up rules. So anytime it said chicken, it went to cost of goods sold meat. Anytime it had seasoning in the line item, it went to dry goods. So you're right. Anyone that has a restaurant, I mean, you can trick it out pretty awesome.
Yeah. Well, for anyone who hasn't checked out Makers Hub, I highly recommend MakersHub.ai. They even have accountant billing. So if you want to get a sweet, sweet deal for your customers, even better. Ted, thank you so much for slumming it with us. We know you have better things to do with your time, but we appreciate it. Any final closing thoughts before we unlock the door and let you leave finally?
Don't be afraid of technology. Be efficient and just do it. I mean, there's so many people, Tyler and Jeremy, that say they're going to do something, and then you talk to them the next year, and you're like, so how did it go switching over to value-based pricing? And they're like, I haven't done that yet. And you're like, come on, just do it. So that's like Nike says, just do it.
Awesome. Thank you, Ted.
Yeah, you bet, guys. Have a wonderful day.
Yeah, you too.
Great interview. If you guys felt like we rushed right into asking Ted questions, it's because we had to, because of my fault, as I mentioned. But really, if you guys have not seen this software as an AP platform, it's expensive. But if you're in the right industry that you need line level detail and super high volume, it is amazing. It is not good for your cousin that just opened a marketing agency that does $150,000 a year. It's not worth it. The price isn't there. But if you are a big company wanting to replace an in-house employee that does tons of data entry, like this software has blown my mind. There's a reason so many people are talking about it. So if that didn't come across, my apologies.
My question that I wanted to get to, and it's fine we didn't, but like where is the right level of activity as an accountant owner that this would make sense? But it really just depends on your clients, right? If you have a one line item bills that come in all the time, probably not worth it. But as you talked about it, if you have several of these and you do any project costing, right, where you talked about where you could put in keywords and it'll automatically go to the right account. And I got to think that there's some sort of like project cost-based things that you can do with that too. Like that would pay for itself right there.
Well, and their software also does terms. So like how many softwares do you get where it might get the due date right? If it's on there, it'll get the invoice date right. Yeah. But sometimes it just says terms, net 15 plus 2% minus 10. And Makers Hub pulls all that in, does the math, and gets it right every single time. It is incredible for line item level projects. So again, construction, you're breaking out wood from metal, from lumber, from whatever else. In restaurants, your proteins from your produce, from your grains, from your materials and disposables. Like, it's amazing. Give it a look if you have any clients in that industry.
And also the only time it's appropriate to break out wood. With that, can we transition? So one other game, and we're going a little bit off script here, or a little bit away from our normal process, but we usually end with a winner and loser. And you have not, I've gotten away for a week and was pretty much off the grid, and was at Scaling, so mostly off the grid. But still, you were not able to avoid that. The large legislation that was put through, the big, beautiful bill, was approved. And as we will always say, we do not have a political affiliation one way or another. We're just worried about how this will impact accountants, tax filings, and all of that. So with that, I would love to take our Tyler through a game I'm calling the Large, Lovely Legislation Lowdown. And all this is going to focus on a certain group and whether this bill makes them a winner based on what passed in the bill or makes them a loser.
So that's all I have to do is say winner or loser.
Winner or loser. I gave you a little pity last time because last time we were live, you went over and I felt a little bad about that. So 50% chance on all of them. Some of them should be easy. So if you go over on this one, there will be ridicule.
I feel confident in my abilities to be able to go over on this. And might I say, I can't get political. Like, I've been fighting that nachos need to be their own food group on the food pyramid for a while. I mean, I guess they do incorporate a lot of the different groups, but all right, never mind. I'll get off my soapbox.
All right, and I got a lot of these, so we're going to jump right into this. So the first one I'm going to say, winner or loser, based on the bill that just passed, manufacturer.
I'm going to say winners.
Yes, so this bill that now makes permanent the key tax breaks for manufacturers, including bonus depreciation and the R&D deductions that were put out there. I believe it was during the COVID bills when it came out, right? Yeah, so. All right, coming out of the gate fast.
Well, I mean, everything we've done so far this year has been touted to help do more manufacturing in the U.S. So I got to imagine there's plenty in there to help them. Sorry, go on.
Yeah, no, 100%. Next one, electric vehicle makers.
I'm going to guess they're a loser.
Yes, they are a loser. So the current tax credit, EV tax credit of $7,500, if you purchase a U.S.-made, and there are various stipulations around that, U.S.-made vehicle, that is getting eliminated, and I believe at the end of the year that's gone.
Yep. And the one thing that goes with it, though, is if you still have your eye on an EV because you like not paying for gas, you're doing shorter range trips, it makes sense for you, bonus depreciation is still going to be there as an option. So, like, we're losing tax credits, but you are going to get some stuff back on those deductions you mentioned in question 1.
Correct, if you're a business user of that.
That's true. Good point.
Yep, okay. Just want to make sure I filed that. Yeah, cool. All right, number 3, multimillionaires.
I'm going to guess they're winners.
They are winners, yes.
Not that you and I would know about this.
No, the estate tax exemption is getting increased to $15 million per person.
Wow.
That's like, let's make generational wealth just continue forever.
Yeah. Easy way to do it right there. Didn't gift tax go up too? Sorry, you did all the research. I know I should know this, but...
I did not research gift tax. I have a very targeted list of things we're talking about here. Do you want to look at that? Come back?
Keep it going, but I might come back with a retort on this.
All right, that's perfect. And none of these should be overly hard. There's a lot of it. Just if you've been anywhere in the political landscape, you should know most of these. So this one maybe, though. Gamblers, winner or loser with the new law?
I'm going to guess there. I feel like I thought they had something in there with like the no tips on overtime and no taxes on tips and overtime. I think gamblers got something in there too. So I'm going to say winner?
No. Gamblers actually considered loser here because now they are limited to deducting only 90% of their gambling losses against their winnings. Before, you could net it out and have the loss. So they could still owe tax even if you break even on your gambling winnings.
Wow. I did not know that. Okay.
That makes sense, right? Like, yeah, I have no problem with that one.
Okay.
All right, next one. Like domestic car dealers, winner or loser?
I mean, you said domestic, so I'm going to guess they're a winner.
Correct. Yes. So the new law says buyers can deduct up to $10,000 in loan interest on U.S.-made cars.
Okay, so I have opinions on this one because now that you've said the full thing, I remember reading this. Can I get hot here?
Get hot.
Okay, I'm sorry, but you can deduct loan interest.
Right. Yeah.
Interest. Literally, the only people that take advantage of this are people that are already in rough cash positions. Jeremy, are you paying $15,000 in loan interest? Not principal, not price of a vehicle, right. The interest on your vehicle. So anyone that's like smart and savvy and paying cash for vehicles, like no benefit for them. So literally the tax deduction only comes if you are either going beyond your means or you're already in a rough spot. But like, I think this is going to incentivize people to buy a vehicle because some salesman's going to say, you get to deduct the interest. And people will always spend a dime to save a penny.
I did not think about this as much as you did, but yes, that makes sense. Because you got to think $10,000 in loan interest, like I'm okay with it if you're going to deduct the interest. Again, you are completely right. You should not be overextending yourself to buy a vehicle, any of that. But like that is a ridiculous amount of annual interest you'd be paying. So like you're financing a Lamborghini and then to get that level of interest. Wow. Yeah.
Yeah. I mean, in my opinion, with where vehicles are at today, granted, we're not as tight in the vehicle market as we were in 21 and 22, but like at no point should if you have enough money to buy a vehicle that you'd be paying $15,000 in interest, it's a luxury vehicle and you should be not buying that, or you should be able to pay it in cash. But you shouldn't be buying this thing for a loan to get nearly that high. So I don't know. I feel like the bill should have been something, because the only reason the people that win in this scenario are the lenders, right? Because you're going to take out more debt and pay more in interest. So it's incentivizing people, I think, to make bad fiscal. I don't know. You and I see enough people's books where they bought that vehicle at the end of the year where they shouldn't have, because, well, they get a deduction. It's like, sorry. All right, I'll shut up. Nachos.
Nachos!
Nachos. All right, number 6, low income Americans.
Low incomes. I think they got some wins in here, back to my overtime and tips, but tell me if I'm wrong.
I'm going to tell you if you're wrong, and we'll talk about overtime and tips later.
Okay.
Considered a loser in this for a couple of reasons. One, cuts to Medicaid.
Ooh,
and also food assistance projects.
Yeah.
And I've gotten a lot of inquiries in the nonprofit world lately, just like, hey, what can you tell us? What do you know? I need to look into this even further yet. But yeah, just some cuts in some basic need programs. So yeah, that could definitely not work out so well for them.
Yeah, good point. Good point. My bad.
All right, number 7, defense contractors.
I think they are a winner, and then a winner, and then a winner, and then maybe a winner.
Yeah. A $150 billion with a B spending boost for defensive products and weapons and all that other stuff. So,
how much was in the tax bill for half-assed accounting podcasts?
I'm going to say we're typically losers, so probably 0. Yeah.
Okay. Just wanted to check.
Number 8, elite universities. I think this would be any university, but elite hurts more.
I'm going to guess they're losers?
They are losers. Yeah.
Okay.
So the endowment tax that they'd have, and some of these, this is why I struggle with this a little bit too, because some of these universities have a crazy endowment, yet every year say, hey, we need to increase tuition 10%, right? So then my kids are going to go to college. I'm going to be broke. I'm going to have to continue losing money on this podcast forever. I don't know. But the tax on the endowment was 1.4%. That now ratchets up to 8% based on their size of their endowment.
Okay.
So,
Wow.
Yeah.
I will say, though, they should have money. They still call me and ask for money. I've been out of there almost 20 years, and they're still calling me. Do you want to donate back? It's like, what did you do with the friggin' 30,000, 40,000, whatever I gave you last time?
Yeah.
Sorry.
Yeah, 100%. Number 9, small business owners.
I've read and heard a lot, and I want to say, I don't know. I've heard arguments either way. I'm going to say winner based on what I think you found.
Correct. Winner.
Okay.
Right now, there's in place the 20% QBI pass-through deduction, the qualified business income, if I remember correctly.
Yep.
That is now made permanent starting in 2026. It was supposed to go through the end of this year, so that's going to continue to go through there. Okay. Number 10, we're halfway through. This is halfway. Fossil fuel producers.
I got to imagine. I mean, if EVs are getting hit hard, I got to imagine fossil fuels are raking it in.
Yeah, correct. Winner. So both getting some tax breaks, which were overly complicated that I decided not to go into more detail on. But also, like, additional federal land is getting expanded to be available for drilling and mining and all of that stuff. So, all right, number 11, technology companies.
I'm going to guess loser, but I don't know what you found. I'm going to guess.
Yeah, we're overall loser.
Okay.
And why this is that there was a big push to have the bill end up blocking states from regulating AI.
Oh, yeah.
That did not happen.
Oh, it got cut out?
It got cut out of the last one. So in theory now, states can still set up by state laws to restrict or regulate AI, and that could definitely hurt technology companies. I actually think trying to align with all the tax rules. Now you're an AI person, be like, well, what's the AI rule in New Hampshire versus Idaho. I don't know.
I will say though, like it didn't all just come down to money. As someone who, we just talked with Ted about Skynet taking over.
Yeah.
I don't know. I'm open to more people being able to say, hey, maybe we should slow the roll for a second. Maybe we shouldn't do X, Y, Z. So I don't know. I'm actually okay with this one being left in from the technologist in me. Dude, I know what I can do with Visual Basic on scraping people's, email archive and having it all saved for me with my limited skills. Imagine what competent people can do. I'm okay with a little bit of restriction on AI.
I am too, and just have general concerns that we're maybe moving a little too fast. But I also feel like the tax compliance example, trying to figure that out if you're a company and you're a small company and you're trying to do this well, right? That's got to be hard. But yeah, I agree.
Yep, fair point.
All right, number 12, parents.
Oh, well, actually, yeah, parents and their kids get a win, right?
I think so, yeah.
Yeah, because aren't the kids getting, 3 years of kids are getting their own bank account?
Yeah, they get the new, quotes, Trump accounts where $1,000 they get for each newborn set up. We briefly talked about that before when this came out. It was like, where's that money going to go? And where do you put it? And all that. So I'm intrigued to hear how that goes. That's at least through 2025 through 2028. So start having babies, people. Get kids.
It's 4 years. I can't do math. Sorry, because you had to do inclusive. 4 years.
Oh, yeah. And then also the child tax credit increases by $2,000, I believe, from $1,800 to $2,000.
Awesome. I'll take that money.
Yeah.
It doesn't come close to covering the cost of my kids. Just soccer jerseys alone. Seriously.
Yeah. Right? It's crazy. All right. Number 13, the telecommunications industry.
Wild guess. I'm going to go with loser.
No, this one they consider a winner.
Why?
And this one is only because the bill passed that there is a whole bunch of the new wireless spectrum that is going to be auctioned off, that can use it for broadband and 5G and stuff like that. Things that they could not use before, which I don't get this. I've thought about this before. I'd be like, what is this broadband? And I feel like I need to be one of the physicists or nuclear scientists to figure this out. And like, how do you restrict it? And then how do you sell it? This seems very abstract to a poor podunk Wisconsin boy like me.
So I didn't realize this, but it sounds like what you're saying is only certain wavelengths within that spectrum were up for sale for grabs to be able to use commercially, and we're opening up further wavelengths. Yes. Okay.
I don't know if were they reserved for governmental and defensive? I don't get it.
Or, at some point you go into microwaves. So, it's all about the wavelength, right?
The length matters. And this is not an accounting topic, so let's move on. Number 14, residents of high tax states.
You're talking about some salt. I'm going to say they're winners.
Winners. Not even salty about it. So yeah, the salt deduction cap is raised to $40,000 and then eventually phases out with the higher earners. But it then also drops back to $10,000 in 5 years. The things when they change later, I struggle with. Like, why? If this is a good idea, why is it a good idea now, but not in 5 years?
You just got to make the budget balance. But yeah, this is the one I like. Like, you're already paying taxes. Like, why should I, get double dinged? I kind of like increasing the salt.
Yeah. All right. Salty. All right. Number 15, 6 to go. Space industry.
I'm going to guess they are losers.
No, they are winners. The bill says it's allocated nearly $10 billion for projects like going to the moon and Mars, as well as decommissioning the International Space Station, which doesn't sound good, but I know it's old too. Are you going to replace it with something?
I think it's going to become an Airbnb.
Yeah, I know those astronauts that were going to go for 3 weeks ended up being stuck there for 9 months. Maybe that was a sign. I don't know.
A 3-hour tour.
Space industry, good. All right, lobbing you a huge softball. We're going to go through this one fast. Immigrants.
I'm going to guess they lost.
They lost. Yep. Oh, and the main thing they said about this is, first of all, they may get a decrease in some of the ACA-related tax credits. The American Care Act, right? Yeah. And then also a lot of immigrants, when they come in, they're earning money and they're sending that back home. That's called remittances. There's now going to be a 1% tax on that money that they end up sending abroad as an
Oh.
immigrant earning here.
Interesting.
Okay, 17. Private equity firms.
PE always wins, man.
He does always win. So I don't understand this one, but it was on the list, so maybe you can enlighten me. But carried interest tax breaks that they have remain, and interest expensing rules expand. So I assume from their borrowing, the tax credits that they get as their corporation, that interest gets to be more of a deduction for them. But I'm not sure what carried interest tax break means, and I don't know. It was a long list already.
I'll be honest, I'm about ready to tell you the answer, but I'm like 95% of the way there on how I'm going to say it, but I know I'm going to make a fool of myself, and I would rather just leave it to a mystery to everyone, because I don't think I can explain it succinctly and sound clear.
Perfect. That's where we live.
Yeah.
All right. A few more to go. Renewable energy sector.
I mean, if EV makers got shafted, I'm going to guess so did this industry.
Yep, correct. Loser. So the tax credits that are out there for solar and wind systems are getting phased out at the end of the year. Those will be gone after 2025.
Dude, that was an awesome tax credit when we put solar on our house. Gosh, that was cool.
My house faces east and west, and I don't have a good southern exposure. I don't think it's...
Womp, womp. No, it was, dude, that was so nice to do my taxes and see that come back.
Nice. Cool. All right, second to last one, corporations.
Winners.
The corporate tax was decreased from 35 to 21 with some of the COVID legislation that went through. That continues. It's going to stay at 21%. Yep. And then last one, which you've been teasing the whole time, workers with tips and overtime, as well as the elderly.
We're going to say winners.
Winners, right? Yeah, so as we talked about on another episode, taxes and overtime no longer going to be taxed. I think this starts in 2026. If I'm a payroll company, oof.
Yeah.
Like, let's change everything and set up new stuff. And yeah, you better have a plan. Start working on this now.
Can I be honest, though? Like, I am terrified what this is going to do in the labor market, just with like what the crazy things my clients are going to try, because they're like, oh, there's no tips on overtime. So what if I just say their normal hours are 20 hours a week? And then like, if they go over that, are they in overtime? And it's like, no. And then they're like, well, can I shift more of their works for tips? And then it's like, well, service charges aren't tips, so you can't make them compulsory to the end user. So there's going to be all these games that people are trying to play. And I, as someone who hate the practice of tipping, I hate tipping. I would rather pay more and not have to deal with tipping than anything else. Employers now are going to try and work towards getting their staff paid on tips, because they could argue, hey, you get a higher rate of return. And if there's no employer side of tips, then they actually pay less too as well. So I don't know. I don't know if this is going to have the desired consequences, but I could be wrong.
Yeah, I don't disagree. I'm not quite as shady as you guys are that I thought through that, but we had somebody in our network in a mutual Slack channel just ask this question, and I won't call her out because she is lovely and smart, because I didn't think about it, be like, hey, should I just work overtime instead of being salaried anymore? Will that save me some on taxes now? And I'm like, I didn't even consider that. But like, so many more definitions need to come into play on this before you can even make those assumptions. And using that as a springboard, the part of this I love is that they are going to provide the occupations that qualify as being tipped, general tip income. And so I thought I'd just run through some of those and see if you think these will be on the list or not. So I would think like bartenders.
Absolutely.
Yeah, I would think so. And I feel like you're in the hospitality industry, so I feel like we at least have some merit here, right? Waiting staff.
Absolutely. I mean, if you're working guest facing at a restaurant or bar, I'm going to say yes to all of them. Waiter, servers, hostess.
The bellhop.
Yeah.
Okay.
Yeah.
Uber driver. Yeah, I thought that was a little like, ooh, the Uber driver tips?
I mean, how much are they pushing you in the app? Tip them. 100% goes to them because we're paying them nothing.
Yeah.
I would guess yes.
Blackjack dealer?
Ooh, that's interesting. I'm going to keep saying yes.
Yeah, think of that. My last one, the dancer at the Pink Pony Club. Will that tip become?
Dude, no one has tipped me for a while. Like, this isn't even a concern.
Yeah. So I just thought, throw some things out there. Are these generally tipped things, and will they qualify? When this list comes out, I want to check it over and be like, who is really tipped and not per the government?
Yeah, doesn't it have to come out in like the next 90 days?
I have no idea.
See, this is why we shouldn't ask questions that require research.
I did not keep track of your score, but you had to get at least 90% of those right, maybe 2 or 3 off. So good redemption.
We'll call it a win, and Earmark gets the biggest win. Because, I mean, come on. Do they have to do any work to come up with CPE questions from this? No.
No, not at all.
Well, Jeremy, again, no new reviews. It's almost like people don't like us. Like, they're actually, I guess they don't hate us. I mean, really, this just solidifies, despite what our stats say of 400 people listening an episode, we can tell they're all bots. There's no one actually listening. It's just you and I. But doesn't change the fact sponsors are coming in finally. So we'll keep those bots around. Jeremy, any words of wisdom before I just say, hey, see you next week?
Do you think that Ted and his wonderful AI technology can help our bots optimize listens for Unaccountable?
We'll task him with it. We'll find out next time. Jeremy, see you in 2 weeks, sir.
All right, sounds good.
I promise the farting noise during Ted's interview was my desk going up and down, but I know you guys don't believe me.
You better send him an email or something and be like, thanks again for calling, sorry, and also the farting noise, we'll take that out. That was my desk, I promise.